Let's check in now with the pro trader Joe Tigay of Equity Armor Investments. Joe, lots of questions for you today about the market, including staying the course, that money on the sidelines. But first, how much of this move into correction territory for the S&P 500 can be blamed on the Ukrainian crisis?
Yeah, these are all great questions, Angie. Last week I was talking about these headlines and we can't really trust them because we have no control over them and we're not really sure what's real and what's not. I said, trust the charts, and we're talking about this decline in the S&P 500. And what I'm seeing is lower highs. I'm seeing lower lows. The same is true in the NASDAQ. The same is true in the Russell. And until that changes, I think money will stay on the sidelines. And I think the market should be viewed as the path of least resistance is lower. Now, I think we'll know when there's a difference with either the Fed or with either what the situation in Ukraine by the charts, more so than by any of the headlines.
Do you think with this big dip in the market, money will come off of the sidelines?
Well, for me, it's a calculated risk. Of course, there is the risk of the market going lower. I think there's an equal risk the market's going to snap back higher. I like risk-defined strategies rather than money on the sideline. But I can't blame an advisor or an investor for being cautious at this level.
How critical is it for long-term investors to just stay the course?
Continue with the strategy. If you have the right risk-adjusted strategy put on before any of the volatility happened, you should be fine. You continue with that strategy because over time we're expecting these types of hiccups in the market, and in the end of the day, we're looking at a longer-term horizon and expecting the market to recover at the end of the day.
We thank you, Joe.
Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.